Welcome traders. I'm recording this Saturday night, the 3rd of December. It is for Monday, the week commencing Monday, the 5th of December, 2022. This year has really flown by, and let's start by having a look at the economic calendar. I would actually, before we do that, is just mention a couple of things. As we head towards Christmas, my recommendation for traders is going to be to not engage in the markets from the 20th of December up until about the 5th of January. Historically, it is the worst time of the year to engage in the markets. It really is not worthwhile. That time should be taken for reflection, backtesting, education, inspiration, creating a trading plan, anything else except actual live trading. I stand by that. I speak from experience. Really just don't waste your time with it. It just will ruin your holidays. Don't do it. Just take the time and do everything else around trading rather than live trading. It's a really good time to sit down, revise your trading plan, check your strategies, backtest, watch some YouTube videos, all kinds of things. Read some books, spend time with loved ones, try and figure out why you're doing all this stuff. Okay, that being said, let's go back to the economic calendar. So this coming week, I'm just checking the times, all good, that's so far, it's all UK time. Okay, so essentially, the only thing I'm going to keep my eye on is going to be US news, which is really just to see how the recession/inflation stuff is going. It's small numbers up and down are not necessarily a problem. It'll be a surprise number that could create a big spike in the market. So it's extra sensible to make sure that risk is decided beforehand, stop losses are in place, and you don't risk stuff around the major news. You just don't chance it. Now, the other stuff of interest is going to be the Royal Bank of Australia's interest rates. I want to see if they start to strengthen the Australian dollar against the US dollar, so that could help. That'll be on Tuesday morning before we even wake up. So I'm doing this in London, in the United Kingdom. That'll be London, UK time. And then the other one I want to keep an eye on is definitely going to be the Bank of Canada, the Canadian dollar, the Looney, because there's so many great, beautiful, strong trends in place on the cross pairs with the Canadian dollar. And this could disrupt that entirely. It could turn it upside down, or it could just reinforce it. So what I would like to see this week when we get to the charts is to see a lot of those CAD pairs doing some really nice corrections. The Aussie CAD's not so great. Kiwi CAD is amazing. Pound CAD, Euro CAD. They've got some great, strong trends in place, and they should provide lots of opportunities for potentially even swing traders, but predominantly for day traders for the coming week. And then on Friday, we've got PPI, the Michigan consumer sentiment. Really, all of those are just kind of how are we doing with regards to inflation. It would appear as though the Biden administration is nailing it, it has everything very much under control. It would appear as though the inflation is starting to come back within reason. However, I do think anecdotally that people are definitely keeping an eye on their costs now for a while, probably for another 3 to 6 months at the very least. And certainly are afraid of inflation. And that's probably all a good thing. We've been spending a little bit too much. We've got Christmas coming out. We've got to buy people gifts. We want to maybe go on holiday in the new year, so that all those things are going to be. And so that could create the impression that the spending is a bit muted, and that maybe this, which will lead to a recession, could happen. We'll see how that's going to go. I think the foundation, the basics are very good. Within the UK, away from the US, I can't speak to that. The UK has now been overtaken in terms of GDP by India, so it is just not growing enough. It's not growing enough, and they're going to have to find genuine ways to stimulate it, not just using quantitative easing or any kind of process like that. They're going to have to find actual ways to stimulate the economy. So that being said, let's go to the charts and have a look at what is going on there. Okay, so I'm having a couple of issues with the license this weekend. Not sure why, so just bear with me if there's some shift in my layout for whatever reason. So that being said, let's start off with the dollar index. So here's the thing, we've had a really good correction. We're kind of approaching a 382, so we're doing the minimum correction. Usually I would expect us to actually go back to 100. The trend is very much in place. We've broken through a level of support. We should at this time, the only thing I'm noting is that we are approaching that 50 period moving average, and we could have a bounce off that. But otherwise, my expectation is to see this continue in this direction. If we have a look at euro dollar, it's looking really good. We had this beautiful double top here. We pulled back, we produced a higher low, and we continued up. 106, very reasonable to believe that 106 is going to be in that area. Look, the other thing I should say, this is a huge kind of pay attention here, is that almost all of these are tied to the US dollar, which is not always the case. So if you're new in the last year, you're going to think that everything hinges around the US dollar. It's actually not normally the case. It is the case during extreme situations, which would be where we kind of are over the last year with Russia invading Ukraine, which, by the way, if you're not aware of it, is one of the primary kind of cogs in the system right now. We are seeing that even though inflation is starting to come under control and everyone's starting to feel a little bit calmer about things, we're not seeing that disconnect. We're seeing everything is still pretty much in play with the US dollar. All the moves are kind of dependent on that. That shouldn't actually be the case, and I believe that the core reason for that is that that won't be the case until Russia backs out of Ukraine. So, and I really think that's the driving factor. That's really the last thing that's in play, and so we'll see how that goes. So the point is here is that it looks like the dollar is going to continue to climb. Cable's looking really good. If it can break through this level at 1.280, it should be up on it should be able to head up towards 1.25, even up to 1.26. Want to get a slice of that if we can. Just going back to that, I want to have a look at that monthly. So there's a really nice level if it can work its way up to here. It's doing well. It is in an area where it could ultimately reverse. So let's be prepared for that idea. But plan A, in line with the dollar weakness. We've got Aussie dollar here. We're going to have to see what happens with the RBA. Hopefully that'll be out the way Monday and we can just see what's going to go on with it. Kiwi dollar is super strong. Any kind of pullback, it approaches this area, there'll be a bit of a reaction. Any kind of pullbacks to test this, but just looking great. Lots of good opportunities. It should be able to hit 0.65. Dollar yen, broken through this bullish kind of trend line. It's very soft line. I just kind of put it there. We are now fully bearish. Although we are due for some corrections to the upside, we've got some really good potential to head quite a bit lower. I do think it's possible. We'll see. 124 could even be on the cards. So that's looking good. Dollar Swiss is just a waste of time. I would move on to dollar CAD. No offense to anyone who loves the Swissy. It's not really just not worth, from a trader's perspective, it's not worthwhile. Dollar CAD is actually struggling again here. Remember how it had all this exhaustion in this area? They managed to break through. Now it's coming back. It's trying to find some support, but it might still want to hit a little bit low. You can see the exhaustion now, that depletion on the weekly, so we might find that it heads a little bit low. We're going to see if that is going to be the case. Now, moving on to, I'm going to do metals first. So gold is beautiful. It's right at $1,800, so that's fantastic. That weekly solid finish. What I would like to see it do this week is to come potentially, and we've actually on the daily, we've already come back down. I want to see it break through this 1,800 level. If it can do that, I can't see reasonably why it can't go towards 1835. It's got the room to go. Silver is looking really nice and bullish. Beautiful. Just amazing. So, but however, on silver, we could potentially still come back down. So we could still have normal, natural, healthy corrections on the 4-hourly before we continue up. They look good so far. Let's have a look at copper. Copper looks really good. Look at this beautiful attempting to, it's an uptrend. We've got a low, we've got a high, we've got a higher low, higher high, beautiful higher low. We're in an uptrend. Copper could be working its way up to brand new highs there. Natural gas is pushing lower, so this is really interesting. Come back up into the bottom of this range, into the middle of the range, work its way back down. So I think it's probably going to head down to these lows. Then we move on to crude oils. Crude oils are struggling, and this is actually a lower high. So the implication is the weekly, this is a tricky one. Crude oil, I'm cautious of. Crude oil is producing a bullish candle, and it is trying to do a double bottom. However, the daily is saying I actually might want to go back down and test 75 again. So this is where it gets good. If it breaks back up above the highs of Thursday, which is 83.33, my expectation is it's going to work back up to 90. Otherwise, I'm expecting this to head back down to 75. The same is going to apply to Brent crude. Most likely, if we get that dollar strength at some point, it'll play out with that. Then we have a look at wheat. Wheat's certainly just continuing to head lower. At this point in time, it is at level of support, so we'll keep an eye on that. But I would say if we could solidly break through and close below that, then we should continue down. It's turning more and more bearish. That also, so remember that wheat and crude oil were the things that kind of went off through the roof when Russia invaded Ukraine, and now they've kind of come back down. In fact, they're heading back down to new lows. So that's good. Coffee is still looking relatively weak. Depletion there, very weak here. It's not impossible if it breaks below 159. We'll see it continue to go even further down. We'll see. It's in a weird place. It's got an uptrend on the daily, but it's not looking bullish in any other aspect. So if it turned around now, it would be a bit of a surprise. Not impossible, but just not likely. And with sugar, it's battling with resistance here at $20. It wants to it's pulled back, produced a bit of a green candle. This is one of those breaks the low, it's bearish, breaks above the high, it's bullish. I'm cautious of that. I would just wait and see breaking below here before I would look to engage in it. Then we look at cotton. Cotton is just a mess. pretty much. It's finding resistance. So interesting, because a lot of commodities here are not looking super bullish, with the exception of the metals. Metals looking bullish, the other stuff not so much. Let's move on to the global indices. I was also going to add that I was in New York last week. I just had too much going on, and I wasn't able to record this episode, my weekly show, but it would have been great. It was just phenomenal. I was staying in Wall Street. It was a phenomenal experience. My first proper time, and it was just incredible to be there. Okay, so let's have a look at the Dow. So what's great about this is it's broken through resistance. It's come back, produced a bullish candle, had a relatively strong finish. The weekly has closed. So the close is 34,459. The high of this 34. Yeah, so it's closed above the high of the previous week. That's okay. It's creeping up. That monthly candle's a bit bearish. That's okay. Overall, what is important here is we are above the 50-period moving average on the weekly. Loosely, that qualifies as a bull market. Loosely. Now, at some point, we're going to have to come back down to test that 50-period moving average as support. I don't normally do that. I'm saying this works very well as a guide specifically for bull markets versus bear markets using the 50-period moving average. It has to come back and test it. So moves down are overdue at some point. However, let's move across and have a look at the S&P. The S&P is not there yet. You can actually see I've got this very soft general trend line. We haven't broken through it yet. We're not above the 50-period moving average. We have produced a little bit of a high-low, high-high. So here's the thing. We need to break through that, and I think we have to break above 4,200. And if we can break above this previous high, we're solid. We're golden. We're not there yet. Then we move to the Nasdaq. Nasdaq, all of these look nice and bullish. It's got a bit of a thing going on now. It needs to break through that. It is not. It's still in a downtrend on the weekly, still in a downtrend on the monthly. Well, no. I'm going to call it an uptrend on the weekly. High, low, high, high. It's looking good. I'm going to be looking for buys this week on this. Breaks to the upside. I think this week is going to be offering, unless there's a surprise, if this just continues with the trends we're seeing in the charts, my expectation is there's going to be a lot of good money-making opportunities this week. More so than some weeks you get a lot, some weeks you get nothing, or not nothing, but very few. I think this week could, if it just behaves, it just kind of follows through, which it doesn't always do, it should offer a ton of opportunities across the board. If you like currencies, there's going to be something there, especially on the CAD pairs, some of the yen pairs potentially hitting lower, some of the, there's going to be some stuff there. If you like commodities, gold, metals, there should be some stuff. Equities, there should be some good stuff. So we need to see a break above this. Here's the thing. For people who are not convinced that we have recovered back into that, once we cross, the expression in the US is crossing the Rubicon. Basically, once we cross above, once that Nasdaq, the S&P, and the Dow, which is already above it, once the S&P and the Nasdaq cross above that 50-period moving average, close above it, and cross over that trend line, it's a bull market, effectively. That's about a 95% certainty, because you just can't get to that point unless there's quite enough buying in the markets. So we could just be experiencing the Santa Claus rally, which is usually around this time of year in anticipation of orders coming around Christmas gifts, so manufacturing ramps up for gifts. It could be that, but I know a lot of people are hopefully not spending, I say hopefully, are kind of watching their wallets and their budgets. Looking at the mini Russell, this is looking good as well. It's beautiful. We've got a nice little bullish thing. We don't have bullish divergence, so that's not a plus. That's a negative. We look good. We've closed near the highs on the monthly so far. We're looking, we're near the highs. We are looking nice and bullish on the weekly. We should break through this, and if we break through, we could see. If we successfully break through it, we could see a really nice, beautiful push up to 2,000. So the Russell 2,000 will hit 2,000. Not to be redundant, and this looks good. So if we can do that, and that should happen Monday. I mean, well, we'll see, but that looks good. Maybe Monday will be anyway, look, the point is, that is something that I'm expecting to happen this week, and we should see some good movements happen there. The FTSE, guys, well done. I mean, we get not a lot happening in the UK at the moment, but man, the FTSE has been performing well. You got to pay attention to it. It's kind of those new highs, and that's. But I want to see us close. I need a weekly candle close above that high. Okay, we've got the DAX. DAX looks good. However, with the DAX, we have clear bearish divergence, which makes sense. We've had a big move up, long consolidation. This could be seen as a bear flag or a pennant. It's weakening, and my expectation is, looking at the weekly candles here, we're due for a correction. And so we'll see how this goes. I think there's a solid opportunity for this to come back down to 14,000, even down as far as 13,500. It might happen this coming week. I think there's a fair chance that's going to be the case. See how it goes. S&P, ASX, this is good, sustainable, nice and good. At some point, I'd like to see this come back down a little bit further, but overall, it looks okay. Nikkei is struggling. This is a warning bell here. This is not good. This is red flags, and I'm curious as to, is this contagion because of China's issues? What's the story here? But this is struggling. That's someone drowning just underneath the surface. That's a struggle happening there. And so we break this low, we're going to start dropping down significantly. So keep an eye on that. I'm a little bit cautious on that one. All right, let's move on to equities of interest. First up is Apple. Apple's doing fine. We've got a higher low here that looks like a nice little bullish finish. We've got battle at 152. Should be able to break through 150. I think if we can get through 150, 152 should be fine. Weekly candle looks okay. It's a higher low. A break above the weekly candle should see a move up, back up towards well, it's going to keep going towards 160 if we could do that. The monthly candle for November is not great. It's actually a weak candle, and actually based off this, we could head lower. So it's important here to see if we break above the high or break above the low, and there are mixed signals there. It seems, let's call it 55% bullish, 45% bearish. AT&T is running out of steam, very much like the DAX. This is leading into a bit of like a pennant type of reaction. It's running out of steam here. I think there's a fair possibility this is going to break lower. So let's see how that goes. ARK Innovation, Cathy Woods. This is what I would describe as an accumulation phase. We've got, look how both of the momentum indicators are trending higher. They're trending higher on both sides. This is a nice little bullish finish here. It's trying to stay above support. That monthly doesn't look great. It looks actually like it's a little consolidation before breaking down, but it is desperately trying to break higher. And so here's what's going to happen. If it can break and gets above 40, it's going to move. But until then, it's still vulnerable. So we just have to see how that goes. But I can say that it is desperately trying to move higher. Okay, we have Amex, which looks okay. It's got to break to this 156 level of resistance. The monthly looks good. It looks like it's able to do that. I need to see a close, a break, and a close above that 50-period moving average to make it safe. Looks good. Just broken below this level, produced a bullish inside candle, should break up. It should break up, barring any unforeseen surprises. Berkshire Hathaway also looking really good. Starting to slow down a bit, but it might actually try to just work its way up here. Otherwise, my expectation is to see it start to do a bit of a correction as far as 300, maybe too much. But so we could be in one of those weeks where it breaks up and then has a correction the week after, or it has the correction this week and then continues to go. Coca-Cola's on fire. That looks good. It's back amongst these old highs. Just quickly see where it is now here. So the high of that 64.52, 64. Okay, so it hasn't broken the previous high. 65 is the next level, but then look at that. It's almost back up at the all-time high. So looking good. I have faith that Coke will be fine. BP. Nice healthy trend, pullback, bullish candle should continue up here. All of this so far looks okay. Let's have a look at Exxon. Okay. So Exxon here is starting to slow down. Exxon is here within a correction. This has got some good room to move down a little bit, possibly as far as 100. So that implies, that's interesting, because there was a little bit of weakness when we looked at crude oil, a little bit of weakness here looking at this. So yeah, that could be something that makes me more cautious on crude oil. Okay, General Motors struggling. That was not the win it should have been. It's battling with that 50-period moving average. It's got to get back up and do that. If we start to break below the low, we're going to see a bit of a correction here. It's struggling. Interesting. Definite struggle there. Okay, keep an eye on that. JP Morgan Chase, pullback, bullish candle here, stalling a little bit, because you know why? It makes sense. We've had such a boost all the way up here, and now we're starting to run out of steam. We need a bit of a correction. That's normal. So correction here could find its way back down to these old highs here. 123, potentially anywhere above that, maybe even as high as 130. So just be prepared for that one. Meta Platform should be working its way higher. It's kind of broken. It's closed the gap here, but this downtrend is isn't broken yet. So we need to get out of that. And I don't know if you've been using Facebook lately, but it's become, well, for want of a better word, garbage. As if you consider it from the perspective of the user, from how it originally was. Like, it's so far removed from the original application that it used to be. So maybe from a business perspective and marketing it out to people, or maybe whatever, it's formed its way into user groups or something like that. But from the original user group thing of staying in touch with your friends, it just is, it's weird. So I don't have faith at this time, and Instagram is going the same way from what I can tell. So my expectation is, for the most part, I don't think Meta is going to do very well. But that is an opinion. That's a biased opinion. Technically, we're still in a downtrend, and I expect us to continue to push up a little bit higher. I think it has a fair game at getting to 150, but this is an area where it could produce a bearish pattern. And I can't really, Peter Lynch would always talk about, if you like the product, you should invest in it. I just am nobody, I don't know anyone who likes Facebook. Businesses are saying they love it because they can reach people, but those people are going to start going elsewhere, and they're not loving Instagram the way they used to. Morgan Stanley is doing well. I mean, monthly that looks really good. A bit of a correction to the downside and a continuation up, but it has 100 in its sights. It should be okay. We'll see how it covers this weekend. We go to NVIDIA. NVIDIA looks great. Very happy with that. Still in a downtrend, but it looks more bullish than bearish. I think it's got room to go to the upside there. PayPal. I really like PayPal, and I've been using it for a while, but I may represent such a small portion of the market. This one is clearly going low. It's not going anywhere. So I'm sorry to say that it's a product that I like using. I'm not really sure. Again, I'm obviously missing data. I'm not making an informed decision. So not ready to do that. This is looking nice and bullish. This has got room to go to 87. Should be able to do that. Should be able to. It's trying to break through this level. I think it's okay. Tesla. Tesla is potentially doing a little bit of an inverted head and shoulders here. It's going to be interesting to me to see if we find resistance at 200. I think that's where we're going, and we'll see if we can break through that. We'll see if that's going to be the case. Now, I should add that I am a shareholder in Tesla, and right now I'm concerned that the figurehead of it spends his whole day tweeting. I'm not like that's a concern for me, and he talks more about politics now than he does about this stuff. So as a Tesla shareholder, I have concerns. That's all I want to say on this. Okay, Vanguard. Bullish, looks good. Should keep going. Let's move on to bonds very quickly. So bonds looking good. They're coming into their first previous low here. They could have a bit of a problem here. 20 moving average, Fibonacci levels, bouncing in these lows. Lots of reasons why they should encounter resistance, but for them, there's also lots of room to go, and they look fantastic. This is an inverted head and shoulders with very bullish momentum. The daily should keep going. That's my expectation there. EURUSD as well. It's broken through this resistance. Not super strong. It's trying to get past here. It doesn't look super strong there. It's just trying to do that swing low here. It has potential up to there. Doesn't look as good as the US ones. And finishing up with cryptos. Cryptos are trying to turn around here, so they finish slightly stronger. They've got to break through this resistance level and work their way up to here towards 18.7. If it can do that, that monthly doesn't look great. Weekly looks okay, but it's got to work up to these old highs. Daily does look better. So we should know by the end of this week how it's doing. Ethereum should be able to break up a little bit. They're trying to turn around, guys. We'll see how it goes. And technically, slightly higher low here. It's turning bullish, but we're not out of the woods yet. We'll be out of the woods when we break these highs, because then more buyers will step in, and as they're encouraged to do it. Solana is in trouble. It'll follow suit if the rest do as well. Cardano is trying to turn around. Excuse me. So we'll see how that does. Binance should also be trying to get through this if it can break above 330. They'll start to recover. So let's just quickly recap. I anticipate existing trends to stay in place. Some of the equities are not entirely there just yet. Overall, the sentiment seems to be a little bit more optimistic. I don't see any upcoming surprises, any major stuff that should throw the markets. There's nothing that is obvious that's standing out, so it would have to be a surprise. We're seeing bonds have got some potential. There should be good trading opportunities for traders across the board. I think as we head towards Christmas, the volume is going to slowly start to ebb away, but come 20th of December, it pretty much is gone. So here it's not a bad thing. There should be good opportunities this week. It's about being sensible. Don't have to trade everything. Have a sensible plan. Stick to your risk management. Take profits. We're not investing at this point in time because the market is not, well, for me at least, we haven't got that. We've got confirmation in most cases of a bull market, but with certain things like cryptos, I'm just not there yet. And this isn't investment advice. You've got to do it for yourself. But for me, I'm not there on some of these things just yet. And that's it. So it's about being sensible. But thank you very much. Have a great week.